Hello and welcome back to the No Reservations Podcast. I am Kasey Anton and this is episode 55. Oh my God, it's exciting. 55. And what is the title? The title of this episode is The Core Numbers Every Restaurant Accountant. And then I slashed the word accountant. So it should be the core numbers every restaurant owner, every restaurant manager, every restaurant must master. Or at least know. But I think master is even better. And that doesn't mean that you need to be the one to create them, to do the books, to figure them out. You should, I don't say should. I shouldn't say should. You probably should, but you could have somebody else do that for you. Like a fantastic bookkeeper who's also an accountant. Maybe it's just your accountant, although we rarely see that. Maybe some type of consultant guru if you happen to have one of those, but every one of people like that, usually starting with your bookkeeper, should absolutely have these numbers known, crystal clear, no exceptions, no room for error, and then they tell them to you, whether it's weekly or monthly, hey, here are your numbers. This is what you should be knowing. So that's what I'm going to talk about. I don't think this is going to be a very long podcast at all because when it comes to restaurants, there's usually just a small handful of numbers that you should be knowing. So let's just get right into it, right? So number one, now that I say that, I can think of a few different ways to look at this, but let's start with your number one, prime costs. Every restaurant has prime costs. They make up the majority of the amount of money that leaves your bank accounts. And prime costs are food and beverage costs and then labor, right? Those two together total up your prime costs. Now, all right. I'm going to back up a second because in my head, when I'm talking about this, I'm visualizing the way my profit first for restaurant system works, right? Which is starts with all the money that gets deposited into your income account. Those are just big, fat, hopefully fat deposits, whether they're from your point of sale, from Stripe. If you happen to collect a lot of cash, hopefully you're depositing it in the bank, at least enough to pay your bills, right? That goes in your income account. That's money that's being dumped into your bank account. But that's not all your money, right? We have sales tax, also known as meals tax, not your money. So that should be immediately moved out of that bank account and put into a separate account that is titled sales or meals tax. And you pay your sales or meals tax out of that. Because again, not your money. You should not be playing with it. You should not be using it. You should not be touching it. It is not yours, not yours, not yours. I cannot, and that is not me being, standing on a high horse and trying to be ethical and all that. Careless, throw ethics out the window. I don't care. I'm just saying it isn't your money. In no way, shape, or form is it your money. That's just not even my opinion. That's just a fact. So the best thing that you could do for yourself is to move it out of that account and put it in its own designated sales and meals tax account so that you do not ever get in trouble. There is never, and I've been doing this for a very long time, 20 years with Spark, almost 20, it's like 18 plus. And before that, with my own restaurants, and before that, with the restaurants that I operated, was a general manager of, et cetera. So we're talking over 30 years. My God, I sound so freaking old, but over 30 years of this, there's never once been a time where it was okay to go ahead and use your sales meals tax money and not pay it to the government. It's not a thing. Okay, government knows what they're doing for the most part. I mean, they suck at it sometimes, but it doesn't mean they don't know what they're doing. They know how much money is owed to them, and they make it very clear. I mean, maybe it's not all that clear, but it's pretty well known that you have to collect sales and meals tax from your clients, from your customers, and then you then turn around and you pay it to the government agencies. Right? That's not news. That's always been that way. So what I find is when some restaurants like to borrow, I'm using air quotes, by the way, borrow that money because they need to make payroll, or they're behind on rent, or they need to pay their liquor bills before they get posted, or they need to pay this food guy before they get shut off. Whatever it is, you borrow that money. It's not free. Not only is it not free, because you're going to end up paying interest and penalties to the government if you don't get to file them on time, but they get nasty. The governments just get nasty with it because it wasn't your money to use in the first place. So they rightfully so get pretty nasty with it. And it is always extremely costly to use money that doesn't belong to you. Think of it like loan sharking if you want, but no matter how you think of it, just don't do it. So back to the income account, all your deposits get dumped in, realize immediately, oh, that's not all my money. Let me separate what's not mine. So then we move your sales and meal tax out. Okay, great. That's going to be what? Somewhere usually between 7 and 9%, depending on where you live. Got it. Move that aside. Now we still have a bunch of money left in that income account. The next one might be your prime cost account. Maybe it's your labor payroll. Again, similar to the sales/meals tax account. Payroll, excluding your own personal payroll, what you pay yourself on a check, is also not your money, right? It belongs to your employees. And you should be separating that out. There I go. I use should again. I apologize. I shouldn't use should a lot, but it's just easier, right? You should be moving that money to a separate payroll account before you go and spend it on something else. That's for your benefit, not necessarily your employees' benefit. That's for your benefit so that when the paycheck date comes, you're not scrambling going, oh shit, I don't have enough money to make payroll, because that is another slippery slope that you want nothing to do with. And once again, and all the time I've been doing this, it's never been a good idea to not make payroll, ever. It's not free, and it comes with lots of headaches, and it could actually even come with some jail time. So let's just not do that. So the next thing out of that big fat income account, now we want to move money aside. Whatever your payroll percentage is, we're going to take that out and put it in your payroll account. So boom, check. Payroll is taken care of. Whew, don't have to worry about that. It also tells you what your payroll percentage is. And then the next one would be your food and beverage costs. And that's a number you should know, whether it's 30%, hopefully less, maybe it's more, depending on your model. And we move that money aside, and that goes to pay your food and beverage bills. And I'm going to tell you something. In every restaurant that we are lucky enough to work with and that allows us to implement this system, it has been life-changing for them to be able to segregate their money in these ways and understand their business. So that's the food and beverage account. And then the rest of the money gets divvied up into all the other things that should be paying for, called real revenue, also known as your gross profit. That's the money left over after you pay your sales tax, your labor, and your food and beverage. And then we have profit, owner's pay, owner's taxes, if you have them. And you might, if you're profitable, you'll have them. And then OpEx is all the other bills. Okay. This is not a profit first episode, although I know I'm talking about it only because it's a great way to get super clear on your numbers. What I want to talk about is the numbers that you should know, that everyone should master. Is one, you should know what your sales tax percentage is. So here in Massachusetts, it's 6.25 at the state level and 0.75 at the local level, totaling 7%. Across the board, 7%, and you should know that. So 7% of every deposit should go into that separate account. That's one number you should know. You got to pay it, what the percentage is. You got to pay it, set it aside so you don't get in trouble or go to jail. Okay. The second number you should know, which is half of your prime costs, which is going to be your labor number, your payroll, your labor. As an owner, you may or may not be in it. That's fine. It doesn't matter. You still have to know what payroll is. Owner's pay, payroll is a completely separate conversation, so I'm not going to get into the weeds of that. But if you run a, sadly, 40% payroll, which is, I say sadly because it's very, very hard for a restaurant to sustain that and break even or be profitable with 40%, but it's what we see often. You should know what that number is. If it's 40%, you got to figure out a way to try and get that down. It can be 40% if, let's say, you have an extremely low food and beverage cost. If that's like 20%, which is possible. We do have clients that run an 18% food and beverage or 20%. Not a lot, but we do have some. And then that's okay-ish to run a 40% payroll. But you should know what those numbers are. So know your payroll, know your food and beverage, know your sales tax responsibility numbers. Those are three of the first few numbers that you should absolutely know and master and hit every single time if you want your model to work, if you want to stay profitable or at least break even. Now, beyond that, beyond those three main things, sales/meals tax, payroll, COGS, which is food and beverage, the next is everything else, right? All the other bills, let's say, that your business pays. But the next biggest number that we find 99% of the time is occupancy. And you should know what that is. I'm not saying you have to open up a separate account, although it'd be extremely helpful for you in so many ways. But I'm not even suggesting that. I'm just saying know your occupancy. Is it 10%, which is kind of like the target we usually go for, right around 10%? Or is it 20%? Ugh. If you have a 20% occupancy, it is going to be very difficult to make money in that restaurant. So there's a few things that you need to know about that. If it's 20% occupancy, then your prime cost might need to be like under 50%, maybe even 40%. If you need to figure out your payroll, your food and beverage costs, you got to lower those so drastically to afford the occupancy. If you can't do that, and maybe your occupancy is only 20% because your sales are really low right now, but you plan on catapulting them much higher so that it drops down to a 10% occupancy, then that's fine. But know your runway, right? Know your runway of how long and what it'll take to get you to that. It's a big number to know, because if your sales, say at $100,000 a month, are running a 20% occupancy, and they've been at 100,000 for many months in a row, and you don't really see them climbing too fast, then you need to understand, okay, we have a really high rent here. We have really high occupancy. The sales aren't taking off like I thought. Okay, we need to rethink things here. How are we going to shave payroll, shave our food costs, our beverage costs, that as low as we possibly can to be able to offset that occupancy right now? It may mean completely shifting your business model, your menu, your scheduling. It may mean that. It could also mean that you're going to have to borrow money to cover the shortfall, the loss that you're going to take by running a 20% occupancy to a certain period of time, and what that runway looks like. So basically, if we take $100, if that represents a guest check, maybe it's a dinner for two, $100, it's after you already pay the sales tax, right? Of the $100, if $30 or 30% goes to food and beverage, that leaves you $70, right? If we know that your payroll's at 40%, then let's take $40 off that. So that's 70 minus 40, that's $30 left over. That's what we have left to spend. If you're saying that if your occupancy is at 20% or $20, the $30 left over minus 20 equals $10. That's $10 left to pay all of your other overhead. That is your dues and subscriptions, which could be your payroll, any other dues and subscriptions not payroll, I didn't mean payroll, your point of sale, your website, any marketing, your insurances. I mean, just go through your P&L, your direct operating costs, which could be linen, security, alarm, unless you have that under occupancy. Like all of the other expenses that aren't food, beverage, payroll, or occupancy is what $10 has to cover. And it's got to cover profit and owner's pay. That's not a lot of money to pay for all of the other expenses. So that's why those are the numbers that you need to know. Those are the most important numbers. Going back to the core numbers, you need to know your payroll. You need to know your sales and meals tax, and you need to know you have that set aside. You need to know your prime costs, which consist of your food and beverage and what percentage that is, and your labor and what percentage that is. The next one you'd want to know is your occupancy and what that looks like for you. Are you hitting it? Is it too high? What does it take to get it in line? And then all of your other expenses beyond that. And then make sure that you have profit set aside. I'm not even hitting on owner's pay, although I should. But I'm not going to for this reason, because I'm realistic and I know that a lot of owners just take the scraps or what's left over, or you just borrow from one of the other accounts I just mentioned and said you're going to call it payroll. But that's going to bring you a lot of other problems as well. But profit is mandatory, because if you don't have profit, you have debt. It is one or the other. That is a fact. That's not my opinion. If you don't have profit, you will have debt. And if you continue to keep having debt with no profit, you're just digging a bigger debt hole, which is no good for anybody. So that's it. Where am I? I'm at 15 minutes. Those are the core numbers. Know your core numbers. Your sales, setting aside your sales and meals tax number, your prime costs, your occupancy, and all the other expenses after that, and then make sure there's still room left over for profit. With that said, I didn't even know I was going to talk about this on this podcast, but I am. I am working on a free tool. It's actually really cool. It's going to be a web page for it. It's called the Restaurant Financial Reality Check. Again, it is free. And all you're going to do is you're going to put in, I think it asks you like maybe 6 or 8 questions. You're going to put in your average monthly sales. And then it's going to ask you for a sales trend. Are your sales declining? Are they flat? Are they growing? Then after that, it's going to ask you for your monthly food and beverage costs and then your monthly labor. Just about, it doesn't have to be exact. And you're going to put those numbers in. And then the last 4 questions it asks are, okay, what's your monthly occupancy? Because again, that's usually the 3rd largest expense in any restaurant we work with. So you're going to put in your monthly occupancy, any monthly debt service that you're already paying. Maybe it's a Toast loan, maybe it's an SBA, whatever, what that looks like a month on average. This doesn't have to be exact. More exact, the better, but just put in an average number. The monthly owner pay, that's not part of your payroll, like any draws or distributions, you're going to put that in. And the last one is the rest of your operating expenses. So anything that's not food, beverage, labor, occupancy, or debt, put in there. So insurances, point of sale, marketing, linens, anything that's not the others, you're going to put that in there. And then it's going to just ask you if your sales or meals tax are current, and do you have profit first account set up for clarity, and then cash reserves. And then it's going to give you a score. Freaking love this thing. It's going to give you a score, like a letter score. It's going to give you an A, an A+, down to an F, and then tell you why. And it's going to give you 3 areas, your top 3 areas to fix and what to look at and why. So it's pretty cool. And the reason why I even developed this restaurant financial reality check is because I was wondering through my book and through Profit First in general, but definitely through the book and through our reputation, I talk to a lot of restaurant owners every month. A lot. I mean, it varies, but let's say on average, I talk to 20 a month, let's say. Of those 20, maybe 2 become clients for all the right reasons, right? I always wonder what happened to the other 18, because on the calls that I'll take or someone on my team will take, they clearly need what we're doing, right? They're struggling in one way or another, and they need help. Maybe they're struggling with clarity, or maybe they're struggling because their payroll is too high, or whatever it is. They need help, but they don't choose to work with us. And in my mind, that's more expensive than working with us is to keep doing what they're doing, which is usually incurring debt and having nowhere to go. But they don't, and that's fine. Everyone can. So I always wondered, whatever happened to the other 18 restaurants? So I started sending out some emails a couple of months back, basically asking that question. Hey, I know you didn't go with us. No problem. Did you find someone else, another provider? Great. Or what are you doing? And I didn't get a ton of responses, but of all the ones I got, it was basically some version of the same thing, which is, hey, I just don't know. I'm overwhelmed and I just don't know what to do first. I don't know where to go first. I don't know what to fix first. And that was it over and over and over again. Yeah, we know we have a lot of issues, but what do I do first? And when people are in overwhelm and don't have a step-by-step, they stick their head in the sand and just keep doing what they're doing no matter how bad it is. That's what we find. That's what I've seen over the last 20 years. That's what I did as a restaurant owner. So I created this to at least give these 18 owners a month that either can't afford it or don't want to pay for our services, to at least give them a direction to go in, to at least try and make their lives incrementally better in any way, shape, or form. So that's what it's about. But it all comes down to just having those basic numbers, knowing what those basic numbers are. Prime cost, that's food, beverage, and labor. Occupancy, what's it really costing you? OpEx, what are all the other expenses? And after you pay all that, if you were to pay it all on time, what's left over for profit. There's got to be profit, otherwise you're having debt. And if you already have debt, now you really need to have profit because that's the only thing that pays for the debt. So just knowing those big numbers is so much clarity in itself and can help you drive the business in the right direction. So that's a wrap. I'm at 20 minutes. I hope you got something out of this. I would really love it if you would share and or provide me with any feedback possible on how I can make this podcast even better for you. Thanks so much. Till next time. Bye.